even buy trade, this is a sell, that would be 0 buys, right? 0 buys, 0 sells. 1 sell, 2 sells, 3 sells. 2 sells, 1 sell, 0. So we go all the way back to the point here of 0, and you can see just how amazing that trade was. But it's not 0, is it? Because look at how many of these green small candles we had going up. If we just take it from the left-hand side of the screen, 1 sell, 2 sells, 3 sells, 2 sells, 3 sells, 4 sells, 3 sells, 4, 5, 4, 5, 4, 3, 4, 1. So we're down to 3, 4, 5, 6, 7 sells. So this area here is 7 short. 7 short. 1, 2, 3, 4, 5, 6, 7. So they actually didn't get net zero until 160. Didn't get net zero till 160 here. And now they're going to start getting long at this point here at 140s, right? So you start your count again at +1. You see how much money they made there, guys? $3,000 on average per contract on those trades. You would imagine that now the price will start going up from these prices here at 140. Not really seeing an oil trade at the moment. We've got the crack spread sell side only, but I don't have a premium against that to get into that short bit of business just yet. You might have dropped it down into a 1 minute chart to find an opportunity. If you did find an opportunity, didn't you? Ah, you did. Did everybody see it? Did any oil traders in the room this morning? Any oil traders in the room this morning? So does everybody see the sell on oil coming in on the crack spread there? First of all, the blue's over the green, so it's a sell trade, but the blues, we're now looking for the blue to diverge against the candles, and we're looking for a big arrival of volumes. So we're now looking at quite possibly the 60 evens sell side level. Does everybody see the divergence coming in here from yesterday's classroom with some buy side liquidity? So there's a buy side liquidity level, yes or no there? Can everybody draw a straight line and find buy side liquidity there? Okay, so when we find buy side liquidity, did we then have sell side value coming in? And was it substantial sell side value? It was substantial sell side value, wasn't it? So when you see that much sell side value, did everybody jump on board and start selling it? And if not, why not? That looks like a really, really good short sell there, guys. It's worth about $500 a contract on the drop so far. Very, very nice trade indeed. Were we right about the equity starting to find a buyer here, guys, at 140? It's amazing how you can catch falling knives in it. You might say there's some sort of subtle art to this, and there's no dark arts to this at all. You know, you did your count, you figured out what the positioning was. You could see that 150 was going to be a dealer's key anyway, regardless of anything else happening. It was also a measured move of this bracket. So all that voodoo magic that you think, how can they find a bottom edge like 140, call it live in the room without falling flat in his face and creating this horrible buy trade here? How's that even possible? Because it's dead obvious. That's how it's possible, right? The top edge at 300, the bottom edge at 225, 75 points. At 225, 75 points gives me a measured move at 150, correct? A measured move at 150. You do the count, you come up with 150. You see there's not a lot of selling coming in. You recognize as soon as they get the liquidity at 150, all the sellers are going to take profits here. And if all the sellers are going to take profits here, you're going to get at least a short covering rally at 140. It's not voodoo magic, guys. It's simple common sense. Something a lot of retail traders lack is simple common sense from the floor. I'm not saying it's bullish, but I knew it was going to bounce from there. And it did bounce from there. So you can see that just getting the simple stuff right can give you some really strong read opportunities. You might just have talked your way into a little classroom, Paul. Kim wants somebody to do a presentation on game theory, so there you go. You can get your game theory books polished off and speak to Kim.